Good morning to all traders and welcome to this Wednesday's Market Insights video provided to you by Orbex. Today we're going to talk about oil and gold. Oil has seen an incredible rally to the upside, 9% following bloodbath following over the weekend. Now gold on the other side has seen a decline as well. That seems to suggest to me that markets are a bit returning profits that they made from safe havens, including the gold itself, of course, to offset some of their losses. That is likely to continue being the case as long as we don't see any stimulus package from the White House, or as long as we see the governments and central banks actually delaying on making up their mind on how they're going to face the issues the coronavirus is actually causing in all economies. Now, I want to start with the oil today. I was actually talking about this move for a while now, right? You remember this? So we've got a 1, 2, 3, 4, and 5, an ABC, 1, 2, 3, 4, and 5. This is what I still see. We've had waves 1 and 2 done, right? 3 wave in the intermediate degree seems done as well. I think we're going to see wave 4. Potentially we can take this gap out, right? So at this level, also very close to the 1, okay? We could then see intermediate wave 5 at 26.41 because that's a 61 Fibonacci extension. It wasn't taken out by the previous dip. Okay, once we take 5, that'd be primary 3, then we're going to see primary 4, and then we're going to see primary 5, potentially even reaching down to the 1268 or so. That is likely to be the case if we continue seeing this as an impulse move to the downside, A, B, C, right? Now this could change, and we can easily actually make this an ABC, ABC, and ABC, which means this would be simply a double zigzag, right? In case that is going to play out, then most likely going to see A, B, and a C, which seems to suggest, since we're wave 3 now, we're going to see 4, then we're going to see 5 in the intermediate degree, and that will be wave C in the primary, and also C in the cycle degree, and then we shoot higher, which means that we're not going to see prices going much lower than the previous low. Okay, so we're not going to expect a 5th wave, we're going to expect just the 3rd wave and then all the way to the upside. But I'm really keen to see what happens in the next few weeks on the oil. Okay, now for today, we can expect that the rally to continue, right? Or even consolidate a little bit, because we are also we also have the EIA report coming in later in the session, and it's definitely going to give us at least some intraday opportunities, right? It's no question about that. Now, if you see this move over here, right? This is from the gap to the current price. We're looking at from 37 to 41. It's like $5, $4 gap. It's very possible that we're going to fill this gap before we see any further decline, right? So the level I would be watching to the upside actually is the 42, okay? On gold, we'll talk about this decline as well, right? Now, obviously, we have reached a new high over here, which means that we are here. Wave 5 is actually up there, right? That doesn't change much on the outlook, to be honest. So at this current moment, I am seeing any move below the 1646 as a continuation down for wave 4. Right now, this wave 4 could end anywhere between the 1520, 1540 zone or so, okay? Or it could just be a very brief correction down to 1566, or even potentially just to the 16 level before we take out the 5th wave, right? Looking at this correction down here, right, then wave 4 could actually be very sharp, okay? If not, it's not sharp, then it means that it's going to take a triangular formation, right? And potentially, not just that, potentially even become a more complex pattern, okay? And then take out wave 4. I am leaning towards a sharp decline, but we're going to see how that pans out. Now, of course, if we get some stimulus package coming in, then most likely going to see the gold extending higher. So the gold is a bit tricky at the moment, as well as the equities, in my opinion, because we really don't know how markets are going to react if we see another stimulus package coming in from the White House, because White House hasn't responded yet on the coronavirus. The response was when cases were very few in the US. So that is it's a different game at the moment. We've seen this market recovery actually, which means that the US dollar actually rose, right? Because we are expecting a stimulus package. So you see how things turn around now. Stimulus equals strength. The first move could be an A, then could be a B, then we could see a C down here for wave 4, okay? Because this is a very strong support level at 1560.